Right, so in the Dow tactical summary for December 30th, going into the market on December 31st, we have a ton of channeling and overreaction signals and half a dozen 5-day downs, 3 triple screens, 2 551Ws, and then in the max pain range compression, there's a lot of good candidates in there as well. And you'll notice there's half the Dow 30 are in a favorable trade location with respect to the 10-day high. So what I'd be looking for is something like General Electric, which closed poorly on Friday with an RSI at 2 value of 3, or Merck for that matter. Merck has a 5-to-1 reward to risk ratio. GE has a 2.7. They're both max pain range compressions. They're both 5-day downs, and General Electric has the advantage of ending in a doji, and is both a channeling and an overreaction. So General Electric is definitely one to look for, as is Merck because of that sweet 5-to-1 reward to risk ratio. Now Travelers is of interest. It's like number 3 in the relative strength zone. It had an RSI value of 2, has a reward to risk value of 3.3. It's a 5-day down and a channeling and overreaction. So Travelers is one to definitely take a look at. Home Depot's been great. It had an RSI value of 6 and was a channeling. So there's a lot of good ones to pick from in the Dow, and we'll take a look at a couple of them. In the ETF 30, let me wait that let that come up on your screen. There we go. ETF 30 tells kind of the same story, a bundle of channeling and overreaction, bunch on the 5-day down. Most of them have test out favorably on the reward to risk ratio, as well as having very low RSI 2 values. So the energy sector, for example, XLE, had an RSI value of 2. It was a big percent loser on Friday, losing 1.7%. The 2.6 reward to risk ratio. It's number 5 on the max pain range compression. It's a 5-day down and channeling and overreaction. So you got to like that. Plenty of targets of opportunity for tomorrow. You can see that the market itself, SPY, had a 5-day down, has pulled sharply away from the regression line. The regression line crossed over its own 10-day moving average compared to and it made that crossover more than a standard deviation away from average. So after a 3 standard deviation move up, it crossed over and is now pulling back sharply. And so that is a signal potentially of a swing high here about 145. And has a long way to still go to get back to normal. That would take it down to at least test the 200-day moving average and maybe turn this into a bear. On the positive side, what I want you to notice is on this one, this takes a look at the z-scores of the 10, 30, and 90 regression lines. And you see the 30-period regression line oscillated right in here and rolled over right at its 1.0 z-score, right where it's supposed to, right in the same place it did on a price basis at 145. And now normal for it would be to come all the way back to the -1. And so that would bring it down here to test 135 and get into the 200-day moving average again, into the bearish territory. The 10 has already pulled all the way back to -1 z-score. The 90 is showing a weakening of the primary trend, and the 30 is rolling over. So that argues for another 3 to 5% pullback would be absolutely normal. That would also, be a natural place for it to find support here around the bottom of the channel And the river had just started to rotate up too, so there's going to be quite a fight, I think, right here around 135 to 137 to see if that's going to hold. Breaks below 135, then look out below. But my point would be is that this is a natural place for it to do either one of those. A sharp move in either direction is indicated. All right, so what I want to do now is shift over to the ETFs and Dow 30. These slides are uploaded in the chat room for you. All right, so let's get started with the Dow 30. Oops. Start with Alcoa. Alcoa disappointed this week. It came right up to its 200 period and failed. But the slope of the 30 is still favorable. This would be a natural place for it to find support here at the river, at the Bollinger Band mean. Now you'll notice that the river has just started to turn up. So after this nice leg off the bottom where it got down to 8, it went from 8 to 8.9, a 10% move, and now it's pulled back about a third of that. If it finds support here at the river and then breaks out, that could be decent, and then we'd be looking at it going up to test the 9. So there's still 10 to 15% on the next leg up if it can hold support here. And there was strength we saw in the industrials and the basic materials. So that's some potential goodness here. And then if that happens, we've got a way to get a good entry here in Alcoa in its oversold condition. So I like Alcoa. Cautiously optimistic. American Express is lagging the rest of the financial sector. You'll notice it just barely got over the 200, hit the edge of the floodplain, and is pulled back to the Bollinger Band mean. But the river is sloping upwards, and it's had 1, 2 higher lows. So let's see if it can rally here. There's better plays in the financials though. Boeing looks pretty good. Looks real good, in fact. This is early in the recovery phase here, so you can see it made 2 higher lows when it was below the 200. Has been made a series of 3 higher highs and 3 more higher lows. The river has left the 200 behind. The slope is positive. It has not even really gotten down to test the Bollinger Band mean, and so that looks very favorable. It can hold here at 74.5. Boeing is an early leader in the recovery of the U.S. large caps. This is what excellence looks like, Bank of America in the financial sector. That's kind of a no-brainer. Everything to love. It's pulling away from the 200. The river's getting wider. It's staying in the floodplain. It's not even getting back into the river. That's what excellence really looks like. Caterpillar is trying to turn it around. Came up and tested the 200, breached it momentarily, has pulled back and is finding support above the Bollinger Band mean. It's finding support where it used to be resistance over here at 87. So if it can hold here, Caterpillar could, like Alcoa, is early in its recovery, but showing some positive signs. Cisco has been key leader in the techs. It's been much better than IBM, Microsoft, Hewlett-Packard, and Intel. It's well out of the, well above the 200, pulled back to the Bollinger Band mean after an extraordinary run up. This would be a natural place for it to find support here around 19.25, and then the next step would be a retest of 2050, and if it gets above 2050, it's a runaway long. So that looks pretty good. Chevron in the energy. disappoints. I mean, it comes back, and now it's right at the edge of the 200, right at the Bollinger Band mean, finding support at the 50. This is where it's got to find. It's got to hold here at 106 to keep this nice bounce off the bottom intact. But the 30-period regression line has already started to roll over, and so we'll find out here shortly if Chevron has the juice. Not much to say about DuPont except it's had two nice little bounces off the bottom. It's still well below its 200-period moving average, but it had one and now two, and it hasn't really given much back in this last week when the rest of the market was selling off. It's finding support above the river, and so I would be very inclined to buy it here if it breaks out above 45.5 with a target of 48 and closing the gap. So DuPont, great company. It's finding support here. I like it as a value player. Disney, there's a lot to love on this one. Never even got into the below the 200 period. It's had a couple nice legs up. It's pulled back to the Bollinger Band mean, a natural place for it to find support, and I would expect the next surge to get up and then test 52. So I like Disney. General Electric, this sets up well for a 5DD. Had a nice bounce off the 200-period moving average, got up to to the second standard deviation up above the average. It's pulled all the way back to the bottom of the river, closed in a doji and at the very bottom. But what I like about this is that it's found support here the last 5 times at 2050, and that would be a brilliant entry if it's going to find support and continue up to 22. And you don't have to pay much to find out if you're wrong. If it fails below 2050, then the next stop is 1975. But I like this as a on a swing trade. You can see the balance of power is shifted. The river is flat, and if it finds support at the bottom of the river like it's supposed to, that'll be a good trade. Home Depot is really disappointing. It was the strongest for a while in the entire Dow 30, but it's kind of cracked. It's moved 4 standard deviations adversely. The 30-period regression line slope is negative. It's a 5-day down. It's got to find support here at 60, but that's really a disappointing breakout. You can see that it's had already one effort to rebuy it back here around 63, but which failed. And so Home Depot is at the tail end in the late fall of its move here, getting ready to get into winter. Whereas what we saw with DuPont, on the other hand, was something that was early in its recovery. What Home Depot has going for it is that it's so far above its 200-period moving average that it's still a standout long-term winner. Hewlett-Packard, this is not as bad as it looks. I think the turnaround is still in, but it had a big gap down, made a nice run up from 11.5 to 15. And this consolidation phase, there hasn't been any panic selling, and it's come back gently into the middle of the river. The river has stopped flowing downwards, and it's actually starting to tilt upwards. So if it can find support here at 13.5, that's a nice trade up to 15, and if it gets above 15, the next stop is 17. So I'm cautiously optimistic about HP. Cautionary tale, though. I mean, it has been horrible, and we've got to see some price follow through. This is not one I believe in, but one that is definitely setting up well. I like Johnson & Johnson here. I'll skip through a couple of these. Johnson & Johnson's come down. It's well above the 200. The river is facing up. The slope of the 30 regression line is up. It's pulled back from the floodplain all the way to the bottom of the river. And so if it can hold here, it's ready for a nice leg up. It's sort of a triple screen setup right there. J.P. Morgan, though, would be much preferred. Its pullback has been negligible. It's still well above its 200. The river is pointing up. If it holds here, it means it's finding support at the very northern edge of the river. and that would be a very favorable. And if it gets above 44.5, then oops. Let's try that again. Microphone check. Check 1, 2. Okay. I had to reconnect the internet. I have a backup connection going in there, but it wasn't strong enough to carry the sound, I guess. So anyway, back to J.P. Morgan. I like J.P. Morgan here. Financial sector has been strong. Only a minor pullback here. Hadn't even gotten to the Bollinger Band median yet. And if it takes off from here, that's going to be good. Let me shift to, I did want to look at the Travelers, so let me jump ahead. Travelers is going to be a nice trade. This is a perfect 5-day down. That if we get the mechanical entry, this will be good. That'll be a sign of a resumption of the primary upward trend. It's well above its 200-period moving average. The river is up. The regression line is positive, but there has been 5-day pullback. That'll be the second time that's had big gap up in gains and then fails and long fails. So this one's kind of deceptive. That trend may be getting old. So I think J.P. Morgan would be preferred, but that one's still a valid 5-day down. Let's see what else we can see real quick. Walmart is of interest here. It's come back and tested its 200-day moving average. Here down around 68. The last time I did that, I went 68 to 73, back to the top of the river, and then failed. So it's definitely oversold and a 5-day down. And if it can find support here, that could be a nice value play. ExxonMobil has definitely cracked, however. Could this be an overreaction? Sure, it could be. But it has to find this double bottom here at 85.5. But really, I think it's more to the downside. That does not look promising at all. I want to shift real quick. Emerging markets looks very favorable. I mean, it just doesn't get any better than that. That's sort of proof positive of the blended monthly rebalancing right there. That's kept us in that, got us into it early and is keeping us in that move. If there's any strength in the U.S., and this is going to continue to go well because that'll bode well for equities and all. It's right near that double top. So while the U.S. has been in a 5-day down, emerging markets are knocking on the door to break out to a new 12-month high. So you got to love that. Same thing with EFA. Not quite as strong as emerging markets, but still pretty good. Asia less Japan is powerful. That's some powerful goodness there. Even Japan has made a nice move, but again, I don't find that to be very tradable. So you can see Asia less Japan looking real strong there. And Japan. Brazil has finally gotten back on board, just peeked its head above the 200-day moving average after a nice bounce off the bottom. Getting ready to, if it gets above 55.5, it's all systems go. A little late to the party, but you'll catch it early in its recovery phase. Gold is, the question is being put to gold right now. It's come back to its 200-day moving average. River is sloping down. It's went down and tested the bottom of the floodplain. But again, I sort of like it right here at 151. You can get a nice entry on gold if we get weakness in the U.S. Europe looks strong, not quite as good as emerging markets have been, but IEV is the European 350, and that looks pretty good. Latin America is a little further advanced than Brazil, so ILF looks pretty good. You're catching it early in its rebound from value conditions. Yeah, U.S. technology is just horrible. The Qs is really bad right here. Weakness in Apple and Facebook and Intel and Microsoft. All of that is horrible. It's pretty clear that Apple was holding up that entire sector. I like silver basing right here at 29. I'll be buying some more of it. I like it. I think the U.S. is going to print its way out of the fiscal crisis, and silver is going to do well. Just want to highlight in Treasuries here. It has been finding the support between 120 and about 128 has been the channel. Every time it gets down to 120, I'm ready to buy it. It bounced off the 200. The slope of the 30 just is improving and has a room to go. It's still a favorable reward to risk if we get a continued weakness in the U.S. And that's everything I want to look at on the ETFs. Yeah, so getting ready for the new year. Hope you guys stay safe, enjoy yourself, but not too much. And I'll be putting out a note here about committing to doing the weekly one-page lessons learned, and doing weekly goals with follow-up. You know, I think that's going to help. So expect a note from me either tonight or tomorrow on how to do that. We'll start that in the following week. So thanks a lot, Rodrigo. Say hi to your uncle, and Happy New Year to you guys too, and keep hanging in there. Take good care.